This is absolutely when you use real estate to leverage yourself or to scale and acquire investments at a faster speed. If you want to build your real estate portfolio all without having to save extra money, tap into your other bank accounts, you can get the capital that you need by tapping into the equity in your home by doing a cash out refinance. Now, a cash out refinance can be done on your primary home. It can be done on your investment properties. To get approved for a cash out refinance, we can use either full income documentation or even no income documentation. And this can all be done within 14 days. 14 days, the money will be wired into your account so you can go do what you gotta do. I had to make this video because a ton of my investors are constantly doing cash out refinances. A lot of you guys may have heard of the BRRRR process, which is the buy, rehab, refinance, repeat. They buy the new property, pull the cash out, rehab it, throw a tenant in there, and they do it again. Wash, rinse, and repeat. So without further ado, let's get into all these juicy details. So the first thing is, what is equity? Equity is the difference between what the property is worth and what you owe. So for example, if you have a property that's worth $500,000, you only have a mortgage balance of $400,000, you have $100,000 in equity. So if you were to get up and sell your house tomorrow, that $100,000 in equity will be wired straight to your account. And if you don't decide to sell that home, you can still access that equity through what we call a cash out refinance. Now, let me give some disclaimers, because before we get into the how to exactly do this, we need to talk about why it's so important for you to partner with a mortgage lender that you trust. Why? Because first off, there's 3 different ways on how to pull cash out. There's a home equity line of credit, which is a HELOC, there's a home equity loan, and there's a cash out refinance. Depending on your situation, that is going to determine which is the right loan product for you. Because I say this because keep in mind that there are mortgage lenders out here who are just trying to fill a quota. And then there are mortgage lenders out here like myself who, is 15 years finance experience, former controller, former accountant, and et cetera, et cetera. So I like to pride myself on being a mortgage lender who is essentially an advisor, a financial advisor. I like to look at your entire picture, not just the mortgage for that one property itself. Because anytime you borrow against your home, whether it's the home you live in or your investment properties, those are assets. You do not want to turn that asset into a liability that you cannot handle, aka you do not ever want to overextend yourself. And working with a lender you can trust, you can also get a different perspective on, does it make sense? Or could we just get cash from other sources like a personal loan or a business loan? Or can we borrow from your 401k before we borrow against your house? So it's so critical that we look at that end-to-end picture. So now that we talked about why it's so important to partner with someone you trust, let's talk about, what do you want to use this money for? A couple good reasons to pull cash out of your properties. You want to pull cash out to acquire more appreciating assets, aka more real estate properties. Or assets could be, maybe your partner on launching a product, maybe you're building out a company, essentially things that are going to grow your money. Another good reason would be to pull cash out to pay for your child's college education. Another reason to pull cash out would be to make improvements to your home, especially if you are someone who works at home a lot. You may look around and you're like, okay, I need to fix something up. I need to get a new kitchen, or I want an outdoor kitchen, or I want a swimming pool. But it has to make sense though. Let me say that about the home improvements. The last good reason would be to pull money out for serious health issues. Maybe someone in your family cannot work anymore because of serious health issues, or maybe you have an influx of bills. That could also be a good reason to borrow against your home. Now, reasons not to pull money out. Number 1, we do not borrow against our home to go on vacations. We do not borrow against our home to pay minimal credit card debt. Because basically what I'm saying is, immaterial amounts are not a reason to pull cash out. You are not going to pull cash out for $10,000, for $20,000, not even for $30,000. If you have good credit, you can easily go get a credit card with a $30,000 limit. You can easily go get a personal loan with a $40,000, $50,000, $60,000 limit. easily. And if you guys want me to create a video on how to access other forms of capital, drop me a line below. So now that we talked about our why, let's talk about our loan products themselves. So the first thing we're going to talk about is the cash out refinance. A cash out refinance can absolutely have different terms. It can be a fixed rate, it can be an ARM, it can be a 15-year, 20-year, 25-year, or a 30-year. And a cash out refinance does have a loan to value limit, which basically means, let's say on your primary home, we can do a cash out refinance of 80 LTV. Now, what that means is the bank will lend you 80% of the value of that home because we need to hedge ourselves and keep 20% equity in your home. So for example, if your home is worth $500,000 and we have an 80 LTV, that means the max the bank will lend you on that house is $400,000. Let's take it a step further and let's say you have a current mortgage on that property. Let's say that mortgage has a balance of $200,000. We will say, okay, we can lend this person $400,000. We are a cash out refinance and we're the only first lien that can exist on this property. So we need to pay off this person's current mortgage. We'll lend them $400,000. We'll pay off that $200,000 mortgage balance. That leaves them $200,000. So let me say this one more time. Your property is worth $500,000, but we can only do an 80 LTV because we have to leave some equity in there. So we'll create a new $400,000 mortgage. And since you only owe $200,000 on the mortgage that we're about to pay off, we're going to wire you the difference of the $200,000. That, my friends, is the cash out refinance. Let's say all of that sounds good to you and you want to move forward and get approved. And let's assume that you are a W-2 employee. We'll need your last 2 years of W-2s, last 30 days of pay stubs, photo ID, recent mortgage statement. And then what we'll do is order an appraisal to determine your value. And then we'll underwrite your loan, we'll order a new title, and then we'll close you out and wire the account to you, all within 14 days. Let's say you do not have any income documentation. Let's say you are hanging in the wind. You maybe have a consulting business or something where you don't report income or you don't want to share your tax returns. We can do a debt service coverage ratio loan, which is a DSCR loan, aka a no income doc loan. Income doc loan is asset-based lending. So what we'll do is make sure you have good credit, make sure you have an LLC, order an appraisal, we'll order title, we'll put your file through underwriting, all without income documentation, and then we will close you within those 14 days. That is how easy a debt service coverage ratio loan is. And on your investment properties, we can do a DSCR loan, whether the property is vacant or if there's a tenant. See, I got options. I got options for you guys. So let's talk about the HELOC. A HELOC is a home equity line of credit. It really does act very similar to a credit card because you only draw from it what you need. So how it works is you get a HELOC and you tell them, hey, can I get a limit of $100,000? Now, they do have minimum draw amounts. So you can't just pull from it like, oh, I need $500 today. They'll be like, wait, hold on. But the good thing is, let's say you go into it thinking you need $100,000, but you actually only end up needing $50,000. You're only going to be paying interest on the $50,000 that you took from your HELOC. Now, the bad thing about a HELOC is it is variable. It is based on prime rate. The prime rate changes. So for example, I spoke to a homeowner the other day. They said, oh my gosh, the last lender talked me into getting a HELOC on a property that was paid in full. Okay, there was no mortgage on it. They should have done a cash out refinance because cash out refinance rates are cheaper than HELOCs. And cash out refinance rates don't move like HELOCs. So she went from a 7% to a 9.75% on one of her investment properties. I'm like, no. But a good thing about a HELOC is how I mentioned, if you have a first mortgage on one of your properties, if that first mortgage on one of your properties is already in a 2 or 3%, you do not want to touch that. It has to be, your return on whatever you're using that money for has to be so great for you to touch that. Last one is the home equity loans. A home equity loan is a little similar to a cash out refinance because you get a lump sum, but the difference is a home equity loan is a second lien. It is a second mortgage. It sits behind your first mortgage. Now, what I don't like about home equity loans is the rates are higher than cash out refinances. But then what I do like about home equity loans is if you have a record low rate on your first mortgage, you can just leave that first mortgage be and you can add the second mortgage to pull money out. So I hope this brings some clarity on how to tap into that equity, how to leverage yourself, how to pull that cash out. I just had to make a video about this because that is the whole point of real estate, you guys, is to build wealth. I'm not saying you need to become an investor. Even if you just want to own one home, even the home you live in, you can pull that cash out and you can go build your company, go build, invest in your kid, go do whatever you want. That is the whole point, guys. So if you know anyone who wants to leverage themselves in a good way, by all means, share my video, support your girl. I appreciate you guys so much for supporting my channel. If you like clear-cut mortgage and real estate updates, by all means, hit the subscribe button. But until next Wednesday, peace.